Okay. Oh, you put it here. Thank you. Look at these guys. They're trying to break out of the range. Look at Nvidia, like at the front door, 1 foot out the door of a breakout. Nvidia, and it's a good thing, like a breakout. The market decides like, no, maybe not now. So they're coming towards my yellow arrow. So that put that I mentioned like an hour ago is only down 24%. It should have been dead, dead, dead. I think what's helping it is the implied volatility is expanding as we approach a Powell event. You know what I'm going to do, folks, in here? I'm going to log myself out of the live room so I don't get cut off in the middle of the Powell event. Actually, don't worry about it. I think it'll happen before then. All right. So they gave up a tiny edge, the bulls. Tiny, those two lines. Those two lines are Fibonacci lines. This is a Fibonacci line. And so we're back inside the blue box. Coinkydink? No, it isn't a coinkydink. We're back on top of the morning range, this purple line, this blue line. If we fall into the arrow, into this yellow thing, expect some buyers. There is weakness in the charts until this little circle based on these candles here. These candles here are fine. See, this played out. We'll take that out. This played out. We'll take that out. And that was amazing. This played out, but way late. So we'll take that out. This just designates an area of interest. This has not played out. That's the put purchase that hasn't worked, but it's not yet stopped out, which is pretty incredible. So if you're staying in it, that means you're risking $100 on the outcome of the Powell event. Because then if they drop here, you get your money back, and if they don't, you lose the $100. That's fine. Make sure it's not a fortune. I don't like to risk money on a coin flip. Let me know if you have any questions in the meantime. What's Bitcoin doing today? Let's find out. Let's find out. The app is struggling to open on the new phone. Come on, where's the... Oh my God, we're crashing down to 118.6. Mm-hmm. If we lose the purple line, we should hit the orange circle. TJ, where did you come from, TJ? Just got out of my DraftKings long from yesterday, but can you please check levels going into earnings next week? Oh, DraftKings. Okay, so last earnings report, it did a U-turn, pop and drop. Anything inside that U-turn is a problem. I don't know what that was. That's probably a earnings box that I had built back then. So it's right in the middle of this. So it has a habit of dying above here. Exiting here and shorting it up here would be my trade, or exiting here and buying the dip would be my trade. So you did well exiting. Charts wise, your decision was wise. I think it goes to 41. Yeah. So the trade is you booked your profit at the right spot. If you missed more profit, that's okay. You can short it once it pops if we disagree with the earnings. Or you can rebuy the long on the dip. So you did your job, you can re-engage. Thank you. Oh, there you guys are. Woo! Neve, Microsoft strategy. I'll tell you in a minute. So I'm relogging in for the people. I got kicked out of our live room. So people on YouTube, if you're not members, the members actually are in a private chat domain that we hang out in every day. So that's where they are. You will hear me talk, and it's not fictitiously. So Neve is asking, Microsoft just got a gut down feeling. So we don't trade on gut down feelings, but if you do want to trade on gut, this is the day to do it. It's a coin flip reaction tomorrow, regardless of how good or bad the earnings are. If you doubt it, just look at STX. It's down, and the report was flawless. Shopify, not Shopify, Spotify, same. Multiple, like last time, I think Nvidia fell on an amazing report. So Starbucks rallied on a fake report. It was a mediocre report, but the tone was upbeat. So, you can guess on earnings. So what we do at the last hour of the day, if I'm still streaming, ask me. Then I will tell you what the market is guessing, because we can read where the money is. We can find out where they're transacting. I wonder why would the Treasury Secretary be concerned with what the Fed is going to do, and he would feel compelled to say it. Why does Bessent feel compelled to issue that he does not expect the Federal Reserve to cut interest rate? Who's he talking to, if not for Wall Street and manipulate prices on Wall Street? I don't remember any other Treasury Secretary being this vocal about things to manipulate price action. If you don't want to use the word manipulate to impact, unnecessarily disrupt the natural order of the price action. I have been trading on my own for a few years and came across you on... Yes! Another ex fella. I love it. Okay, so hopefully you stick around, TJ. I bet you will love this room. Everybody's amazing. You just need to find your groove and your contribution, and it'll be amazing. You don't have to contribute. You can just sit there and watch. But the more you ask, the better. Thank you for that. That's 3 people I met recently because of X. That's how I started on X. Started sharing on X and then getting to know people. Getting closer to that purple line, inching into it. Yeah, the purple line has been the top of a zone that was critical yesterday and is critical today. If they bounce off of it and they make a higher high, they have effectively established it as support. Except today, in about 27 minutes, we have something that gets in the way of the natural order of business. So take it with a grain of salt. These bounces are thin. My charts show the size of the width of the candle shows the size of the volume inside that candle. So if you see candles that are wider than others, they have heavier volumes. So these are 15-second charts. Let me zoom in. Then you can tell, like this candle right there is thicker than this candle right here. It had higher volumes. Look at these. There's no volume in these, but look how easily they travel higher. It still counts. Some people trade strictly on volume. That's not me. But if somebody says, "Oh, you want to close your longs because of volume," I would, or vice versa. Look, they're gapping up inside the Besant box. Mr. Besant said something yesterday to cause really wacky candles around. Look at this. What is happening here? Who is this? XLF, XLI, XLV? No. Who is this? ABGO. Let's go to 15 seconds and see if we can identify it. NVIDIA, Microsoft. No. Apple. No. I don't know. Maybe XLF. Not XLI. Weird. With Caterpillar, it's not XLI. XLB? Maybe. XLP. Staples. Combination of things. Anyway, pretty easy travel inside the blue box. 636.50, the top of the blue box is important. 636.45 is important. Let's see what they do with those. If you're new and you're watching from YouTube, on the upper right-hand corner of my screen, that's 7 stocks, the largest 7 stocks in the S&P. On the middle part, that's all these ETFs. And the bottom part, we just ping pong. We were watching Apple for a trade down earlier. It bounced. They're selling rallies in Apple. They're tracking 209. They came within 32 cents of that. Yeah, I know. That hasn't changed. Gex. Dogs are hilarious. We have two. I give them both the same snack. Never fails. They look at each other and they go in different directions. A strangle is a good idea. Sure. If I'm quiet for 30 seconds, don't panic. An inverse head and shoulder or a head and shoulder doesn't matter. A pattern is not a reason to buy something. A pattern will just let you know how far we go if we cross the line. It's not a study, it's a measuring tool. If you're seeing inverse head and shoulders, you're probably not seeing an inverse cup and handle. That is on the mirror image of it. So, and an all-time high is not an inverse head and shoulders, it's just a breakout. You can use that logic to kind of like say, okay, if we do break out, this will be the target. If you see head and shoulders is not a reason to buy a put, but if you're holding a put and they cross the neckline of the head and shoulders, then you know your target. Yeah. The purple line was surgically accurate, right? That's why we draw lines and we keep them. And I talked you through them. And if we break out of this one, we shoot for the red line almost immediately. But just like they trapped some bulls earlier today, if I'm a market maker, I'll do poop and do this. So if you want to buy a put here for the next 20 minutes, you can. However, it looks like a runaway rally. Buy it from a little bit higher. 636.80. For some reason, does that number sound familiar from yesterday? Yes, that's an ES failure from here yesterday. So if you want to buy a put now, you can. But if you bought a put earlier and you lost, do not buy another one. 637 put would be my choice. It's $120 if you were to buy a put now. But 20 minutes into the event, save your money. Like I said, easy. So now we're back looking at the days range, the orange box all the way to the left. Okay, let me give you a different perspective. SPX, take out all the lines. Here's the perspective. We're trying to overcome 2 prior fails, 3. Going above them is not a breakout, especially that you have this one right there, 6,390. Going above them, closing, going below or 2, closing, going back, and beating it. Now you've confirmed the breakout. And then to use the logic of the inverse head and shoulders, if you want to, you can estimate how high they go. I can tell you that there'll be $6 to $10 right away from here. So there will be, the target will be immediately 6,395 and 6,398 on SPX terms. Look how frothy this rally is. Thin, 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 thin. No red ticks allowed. ETFs are doing well all together as a unit, so who cares which one of them is leading? Those are the ETFs all by themselves. And if I go to the top box, those are the top stocks. So they're just buying everything. Let's go to TradyTix on the other window. The algo flow just went super bullish, and there's no divergence. Still, 631 is the biggest magnet on the SPY. Unbelievable, I know, but that's the biggest magnet. Second biggest magnet is now 639. Not 638 anymore, 639. Yesterday, they left a big one, 640. It was massive, massive. The SPX, anything is possible. The biggest draw is at 6310, so that agrees with 631. I'm going to chalk that up to some wild thing, because that would be an amazing win if it actually comes down there. 567, the only magnet on the QQQ, but I would look at 568 as support instead. What am I saying? It's the wild, wild west. Make sure to lock in profits. And if you make a bet, make sure it is a bet and not an investment for today. The VIX hasn't budged, but that's normal. We're going into an event. Beep. There you go. I said that earlier, I think, today. Unbelievable. So now we have a breakout day, a green day, before the events happen. Imagine if they receive Powell's message favorably and they rally plus 1%. Imagine if the overnight is also greens plus 1%. We can end up opening tomorrow in all-time highs on the SPX and the QQQ. And I honestly don't know what they want to do with the small caps. So they're now up 1%. They're in a zone that is pivotal, the small caps. So they're nowhere near the all-time highs, but they need 228 IWM to be dead and buried. They haven't been able to. 226, they start losing steam. 228, they need to clear that. So they need an unbelievable overnight reaction, and they can do it. So by morning, they could clear 228 if they want to. That's why I said yesterday, what do you do on a red day? You protect your account if you're bearish. So if you did that yesterday, you're holding greens right now. Or you're not sweating because you're holding calls. I don't know what that means. You bought a put and you made money? Sure. August 4th on the XSP better than July 31st. Yes. It's probably lower volatility the further out from current price you go, from current time. And it's probably not that much more expensive, and it gives you a few more days. The Fed thing is in 15 minutes. All of that information is in the morning note. It's always 2 p.m. Always. And as far as what to do with the Fed thing, I'm going to write it out for you. I believe I have saved it as a... There we go. Look how fast I type. This is how it happens, which means what? I'll post it here for you. Oh, I can't post all of it. So I'll tell you on YouTube. You can read it on the screen. At 2 p.m. Eastern, they release the note entirely. So the market goes wild. Steve Leisman then comes out and reads it and tells you what it means. The market goes wild. And then 10, 15 minutes, Powell comes out and reads the same statement. However long it takes him. Whoa, who just exploded? Mega cap. Look at that. ABGO? Who is it? Somebody just had a happy moment. And then he comes out and takes questions and answers. Maybe Meta. Yep, Meta. Nice move, Meta. What the heck? You can see that candle. Look at it. That is... this candle does not look like the others. Those are 15-second candles, but dang. Anyway, so the second fire, I think the more... the interesting part will be in the question and answer session. After he reads it, they open it up. Okay. If you bought a put at 637 on that orange squiggly thing, you're not losing any money. Maybe 3%. You can stay in the put. We can come back to the bottom of the blue box. But the bulls did so well breaking out of the blue box, they'd be stupid to let it go. If they just stay on top of the blue box, they have a huge advantage. That's a springboard from which they can bounce for Powell reactions. Let's see if they're smart. Otherwise, they just trapped some bulls. As far as the Steve Leisman thing, I know for a fact that they have the statement already in their hands. I wonder how many times he put it on his desk and goes to the bathroom. And then you have his CNBC fast money traders just walk past his desk, drop something on the floor, and they go, oh, whoops. And then they just take a little peek. You know, innocent. Who's going to know? No one's going to know. Oh my gosh. Call me a cynic. Netflix, I sure can. Short term, how short term? We love short term. It's falling into a fat candle of 1170 short term support. 1170, 1166, 1162. If you get to 1162, you're going lower. They need to bounce to 1220. Otherwise, they might go to 1050, 1060. Netflix, slightly longer than short term. I don't know how much short term you want. You might bounce to 1175, exit longs at 1175. I'm pretty sure I covered everything you might want on that. That put is not getting better, so body language is that they might want to bounce one more time. We'll see if they're lying about it. Ooh, the suspense, the suspense. Zeppelin. Oh shoot, I set it up as a call. Dang it. Oh, that's why. It is getting hotter. Never mind, I mislabeled that put. I don't know how much it was. Bummer. Was it $1.55? $1.50? Let's go with $1.50. So it's up 8%. No, can't be. $1.55. It's flattish, up 3%. We'll go with that. My bad. If anybody noted it, I would take your number. And they call and put. Yeah, strangle. Not too bad. So when you buy a call and a put, all you need is a big push either way. You don't care who wins. So we have two extreme targets today for you, Ryan. We have something going on at 631 and something at 639. Either way, you'll get paid. That's SPY. But if SPY goes that wide, your Qs are going that wide. That's fine. You might be able to swing trade them too if you're good. If it spikes one way, you close that way, and if you risk losing the other side. So let's say you paid $4 for the strangle, and they go in one direction, and you will make $100 off of that one. And then you're strong, you know what you're doing, and you say, I can manage the other risk. You know, you risk losing quite a bit of money, but if you've done it before, that's not me. I don't do that. It's just not my style. But I know somebody that does it for a living, and they have a paid service doing that. $1.40 for both? No way. Oh, it's a strangle. Okay. Look at that green tick. How easy is that? And that one is the XL posse, not a single stock. The XL group, you can see that. So let's take a peek and find out who the heck it is. We go to 15 seconds here. These are all the ETFs on one page. So we have the XLB of all places, the materials. God, that bothers me. XLV fine, XLI should be doing better given Caterpillar's performance. XLP staples, that's a defensive move right there. Very well timed bounce. You're welcome, Edouard. By the way, you see that orange thing? It played out only from a little bit higher level. It played out. I can leave it there. It might still play out again. Okay, you're taking a put on ARM and NVIDIA, or just one? Are you trading NVIDIA using... No, you're trading ARM using NVIDIA, or what's that NVIDIA word there? Oh, NVIDIA. NVIDIA, if it pops, it's going to 182, like that. Because that would be a big flag breakout. Yeah. No, I think that was more of ETFs moving at the same time. Yeah. So as far as ARM, I'm going to look at ARM. I'm going to look at Qualcomm, Microsoft, and Meta, at least, before the bell rings in the last hour. We will look at options to see where the price action is happening. If it's that cheap, yes, it's today. Bonds all red. Yes, because they exploded higher yesterday. Okay, so the bond market broke out yesterday, and today they're going back to the breakout line. That's how you break out. I say short it yesterday because that does not make sense. There is no way that that makes sense. So this is the TLT, just the long bond, 20 plus years. They broke out yesterday from here, and now they're coming back into the breakout. Boop. But I would vote against the breakout. So if somebody shorted it yesterday, they can scalp it. Don't overstay your welcome in the TLT. It does not let you enjoy that too long. Well, he quoted one. He gave you the legs, and he quoted his price for it. So maybe they've changed. As long as you get the legs that he's mentioning, then you might be at the same spot he is. And if you look at tomorrow and it does quote $1.40, then maybe he is into tomorrow. I still love the price action in the XLI. Check this out. Yesterday, I said DIA by mistake in the morning note. I meant to show this one. The shenanigans on Thinkorswim has different quotes. Look at this. The XLI 2 days ago, out of the blue from 155, boop, 168. What the? Imagine he cuts rates today because he struck a deal with Trump. I'll cut rates if you let me finish my building this year, please, and thank you. I just need $100 billion more. You miss me. Pam Pam, come back in. Subscribe. It's cheap, cheap. One trade a day will pay for a month. Okay, we have 2 minutes. It is not available for Benzinga people. That's not my choice. They started a thing that ended up in that. Well, it does. One iron condor a day can pay for the whole month. $400 worth of risk. You collect 100, you risk 400. If it works, that one day pays for a whole month. So they popped reaction. It's like he cut rates or something. Look at the mega caps exploded higher. Like, ooh, yes, great. And now they're going to the pivotal zone from yesterday. So I want to bring your attention to a couple of things. 3 things. 1, look at the accuracy of the purple line. That's why it sounds ridiculous to keep track of these lines. Look at that. 2, look at the accuracy of this line. And look at the accuracy of this line. Tell me we're wasting time tracking and leaving lines and looking at candles. All of this is science only because machines look for science. They don't do anything willy-nilly, nothing. And that put is barely losing money. So they haven't decided that up is the direction. They haven't taken away the premiums yet. Yeah. Blah, 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 blah. Same. So this is the prepared statement. That's the prepared statement. I think it takes him about 20, 25 minutes for him to read through it once he comes out and reads it. And then they open it up to questions. And look at where they went, to the bottom of the blue box. That put is up 12%. You can lock it if you want to. It's 16%. You can lock it if you want to. The iron butterfly, let me know where it's at. I don't have enough windows to show it right here. Okay. All right. So now you can get out and watch what the heck they want to do. Look at the reversal in the ETFs. It's like they discovered gunpowder. What idiots. I should reword it. How silly. Look at me, all kosher and stuff. How silly. Look at the mega caps right in the middle of the box we built for them. Like right in the middle. You can't make that stuff up. Nobody's an idiot. The market is silly. They rally like they discovered something new and then they give it back up. Same price. Thanks, Luis. So we're back to the arrow, right? So we can delete that. The squiggly mark played out from a higher level, disrupted by headlines. But so the headlines usually expedite what was about to happen a little bit more than usual, a little bit faster than usual. So they overshoot, but it usually plays out. So now I think there's a lull in the frenetic action because nothing is going on. Now, Leisman is probably done talking, and Powell is probably getting ready to say, "Good afternoon, ladies and gentlemen. Let me start reading the statement." And he reads the same statement we all just discovered. And then they open it up to asking questions. Yeah, I don't know. The market is rigged to go higher just because the talking points is higher. The White House controls the narrative 100%. So it's hard to convince anybody that something can go wrong because they've got an answer for everything. Yeah. I know they didn't say anything new because they don't have any new information. So that would be silly for them to say something new. So 9-2. So there were two that wanted to cut rates today. Whoa. Okay. It wasn't unanimous. There were two that wanted to cut rates. That's probably what they spiked on. Like cutting rates is going to do anything. It does nothing for you and me, folks. Nothing. Zero. It does zero. He cut rates before and we benefit nothing from it. In fact, the last time he cut rates, mortgage rates rose. They went up to 7, 6.9 and 7, 6.95 and 7 from wherever they were. So the market is not necessarily on the same page as Powell. Look at how indecisive they are in the top right-hand box and the middle right-hand box, which is good because they didn't see anything new and they're waiting to see what he will be asked and how he will answer it. Meanwhile, we can take our attention to something else if you want. I bet you Apple is going to 209 or lower today. We'll see. There's no level to watch with Nvidia. It's breaking out. It's pennies away from its highs. If it takes out the all-time high, 182, 185 will become an immediate target. There's nothing to watch. You're long, you're long. That's the leader of the free world is Nvidia. $4 trillion company. 60 to 70% growth. 28, maybe 30 times forward trailing 12 months sales. That's on the expensive side, but not for somebody that does what it does. Leave it alone. You're either long or you're leaving it alone. I would like to meet the person that sold us that bought puts from us at 59 weeks ago. If I can count them in the number of weeks on my finger, that person I would love to meet just to have a discussion. What is VST? I didn't hear you guys trade VST. Viasat. But when did we, or Vistra? Oh, okay. I wasn't here. Nice. I think Apple is in danger of copy paste. In danger of this. All right, cool. Yeah, Merit is amazing. Yesterday, he held a session on Discord. I didn't even know about it. That's how independent he is that way. Thanks for doing that. I missed it. I should have been more on top of it. Someone let me know when he starts answering questions. You see how they bounced off of the blue box again? Just around the purple line, just over the orange circle. The orange circle, they should have gone there. The orange circle is some weak spots in the rally around the yellow. The yellow box just surfaced in the past 5 days or so. It's a pivotal zone. So at the end of the week, it will matter whether we are above it or below it. I'll keep an eye on it for us. I forgot exactly why. Oh, I remember. So it was a fair value gap yesterday twice. And it was again today important as candles. It wasn't a fair value gap. It was just a good set of candles. So I'm going to just extend it and see where we're at for the next 2 days. Now, given that we buy dips and we make highs, we must be above it. And if we're not, then maybe that's a conversation we can have. Okay. The VIX is holding still because there's still the mystery of what he's going to do. Let's check on the VIX for a little bit. This is the VIX itself, not the VIX futures. Today is Wednesday, and this is the expiration day for the options on the VIX for this week, and it's AM settled, so that's out of the way. All right, so let's talk about it. it fell to 14 and change. And if we zoom out, that's a descending wedge all by itself. They are selling rallies, but if they sell the next rally, that means we will have 13 level VIX. That's Bernanke level times. When we had full blown QE, we weren't at all time highs, and everything else that comes along with it. Also, there was you can see that concept a little bit better with the VIX futures, which this one doesn't chart very well. So you're just going to have to take my word for it. Let's go to a day. So this is the over time. 13 level VIX would be like December levels before we knew that whatever happened last December and the relief rally in March and the May pops, the punting of the tariffs or whatever. Anyway, it's a good talking point, but for me right now, it's a matter of what's logical and what's not logical. It's illogical to have 13 level VIX, so this is a bottom for the VIX for the next few days. That was my take at 15 and 14.7. The put I mentioned, if you didn't scalp it, we'll use it as a talking point. It's back to being green. Okay, flattish green, which means they're not showing their sleeve that they want to go what's up their sleeve. Let's look at the trade ticks now, the gamma exposure, the 0DTE gamma exposure. Now we have a change. The QQQ now is 569 or 70. Those are the second and third largest magnets. 567 the largest, 568 support. So I still say it. The bulls want to stay above 568. That's the only statement there. The SPX still, what? Get the F out of here. What is the largest magnet? Well, this gotta be, they changed the scale. Oh, they did. 6310 is still the most interesting spot on negative gamma. It's not huge, especially for the SPX late in the day, but it's there. The second largest is 6375, which I believe where we are, right? No. So we have $10 of downside pressure, one SPY dollar of downside pressure, any which way you slice it. SPY, two contenders, 639, 631. 632 super strong support. So we either super spike or we super give it up. That's what they're saying. Neither of those two, nobody's showing their hand yet. I bet down because for the last 2 days, this is the third day, we failed to rally on good news. The TLT didn't budge. That's weird. Silver is about to lose its lunch. Uh-oh, which would be good. I'm short silver, and I need another good drop in order to get back to even. I'm a little red. We have had several stocks deliver good news, and they failed to rally. I'm sure they found a good reason either way. Trump signed a new order. Amazon. What do you mean? 829 packages into country will take effect 40%. Oh, anything that Amazon sells into Brazil gets marked up 40%? Short Amazon. Is that real? How much business does Amazon do in Brazil? Is that what this headline says? There's no August 1st deadline. They kicked the can, didn't they, yesterday with China? I don't know. Any headline is positive. They're going to kick the can. Let me double check. I'm going to speak to my AI here. Where's my microphone? I don't know how to use voice mode. I don't know how to use this app. Do your best to research. Let's see here. Do your best to research the percentage of Amazon's total revenues from Brazil market. Yeah, I don't know why it's not taking me.
It's a small slice, but the market's growing fast.
1.1%. That's a nothing burger, though. It's just a talking point. If Amazon falls on that one, it's a buy to dip. I honestly lost track of what is deadlined when. I thought China had weeks on the deadline, and yesterday somebody said they kicked the can another time to like September or something. Okay, so we haven't done anything in the last 20 minutes because there's nothing to do. I don't know if Ryan was able to scalp calls on his strangle or strangle. That was something to do. He can rebuy it now to get back into a strangle. All packages, from what I understood, not just Brazil. Now that would be something. That would have moved Amazon. For Amazon not to have moved at all, I don't know about that. Maybe it's a proposal and it's not an actual thing, but even then you would have seen it in the chart. Watch how Apple is following that forecast we did. It's too dark. I'm going to lighten it up again. There we go. That's better. I think it goes to 208.8. That's a moving target. The longer it takes to get there, the deeper it gets. So this looks like a head and shoulder-ish, centered, not centered, lined up where? Around the purple line, around the blue box. So it's an amateurish way of considering that way, but not really. What this is saying is that if they come to the yellow box, they will probably come to this box, to this line. If they come into this area, that means they're planning on coming to this area. So 1, 2. If, I'm not saying we're going there, this head and shoulder pattern concept says if we do this, then we do that. So hold the put. It is up 4%. What do you got to lose? Nothing. Which put? The same way, 637. I estimated the cost was $1.55. It may have been a little bit less, a little bit more. So it's greenish. Expiration today, SPY, easy to trade. Oh, Iron Condor. If you had the Iron Condor from this morning, you've got more than 50% of the gains. You might want to close it out. And that would be one contract will be 3/4 of your monthly fee. One contract. And you only risked $390. Just saying, somebody challenged me on that. I wish I can make my monthly fee. And if you're on a yearly plan, you paid $60, $69 will cover the monthly portion of a yearly plan. So it is, just ask other rooms. I know somebody who has a much smaller room, much shorter time, and fewer bells and whistles, and it's $275 to $350 a month. So no apologizing for charging to get in here because the collective is worth something. The amount of effort as a group that we put in here is worth something. 636.60, that red line, I didn't draw that line. That is automatically drawn based on Fibonacci. Entertainment alone is worth it. Ooh, yes. The jokes are amazing. That's a matter of perspective, of course. I'll tell you what, though. I downloaded a small drum set on my phone. It's hilarious. Did it come through the mic? Childish, I know. No? Okay. I do have a soundboard, but I need to install it, and that stuff takes time. All right, they're trying to do something. Is he starting to answer a question? All right, James, welcome to the group. I love it. No, okay. That's when things will get fiery. So I'm going to go on mute for a second to go get a drink of water before he starts. I missed the goosing. Another push against the prior fail. So the way I see this is this is an honest failing zone. Well, failing in quotes. This is an overshoot on some headline. So this should be resistance. And this will be normal. Let's see if they play out that way. Taking this red line out shoots you to 637.7 to 637.8. 637.20 plus or minus 10 cents, where the line is, was really pivotal yesterday. It came out of nowhere and it became important. We kept watching it and it kept repeating itself. So I was like, all right, well, we'll put a line and we'll watch it for the next couple of days. Copper Did copper just drop 11%? Somebody brought it to my attention this week that copper was violent. So HG, that's copper, no? Yeah. Woo! That will break an account if somebody's trading the futures. Woo! Holy moly. So who's in here? FCX? Okay, so this is your opportunity to go long FCX. If you like FCX. Yeah. But we know how that goes. That means come to the table, come talk. Okay, we might have something to do here. Let me go check out FCX. Good thing I looked. Who else other than SPX? FC? What's the best stock? Maybe Raghu knows. He does a lot of research. Did I see FCX reports earnings in 78 days? So if I take a trade for 79 days, that's pushing the limit. There's not a lot of premium. You can sell a 35 put naked, and they'll only give you not even $100. Okay, so credit put spread at a 12 delta or 32. No, that can't be. Let me see here if they'll do it. Edit order. Edit order one more time. Come on, Nick, get it right. Sell the open, buy the open. Oh, he's speaking now? Okay, so now he's going to answer questions on the fly. Now the fireworks start over again. Okay, so that did not work. That does not work. So, the way I would treat this, I would sell a naked put at 33 or 34 for December and call it a day. And own the shares down there. They just made a higher high. They might come back down. So if I was a market maker, I would want to bring this down. Right back down to here to fleece everybody. We'll see. if they will let him do that. I can't get anything to fill on this FCX out in time. You'll have to give up a lot of premiums. The VIX did drop a little bit. The put we mentioned lost a lot of steam, so maybe they don't intend on dropping back down. We're only up 0.4%, so there's plenty of room of more oomph. The mega caps are about to break out. NVIDIA already broke out, and Alphabet is already broken out, and all the other mega caps have room to rally back. Now, they're going to realize at a moment that we're going into another coin flip, which is after the bell, Microsoft, Meta, and company. But for now, they're not hearing anything scary. They shouldn't. He's not going to say anything scary. Then he would make his matter worse with his boss. So let's double check the GEX. No change. No material change. Nothing. Not one thing. That's very bizarre. Let's look at the algo flow. Very positive and getting steeper. Let's look at the dollar amounts. Nothing outrageous. So price action to the upside. Let's go to the SPX, the best visual we have on buy the dip and make a higher high. This is target 1 of 2. I said we can go up $6. We achieved the $6. And up to $10 is doable, which is $63.98, I think was. We came pretty close to that as well. So this is the breakout target 1.5, maybe 2 on the SPX. So yesterday we fell from a high. We sold the rally, made a lower low. Yesterday we sold the rally. We did not make a lower low, and we just made a higher low. So expect them to be at 64.14 by tomorrow. That's what they want. Let's see if we can foil that. Okay, I missed it. Well, Nick, we're talking. Look at this. Look at this. This is foolish reactions to a word of a guy who doesn't matter as much as we think he matters. He does not matter, I promise you that. The Fed is not in charge of anything on the stock market. They're in charge of the overnight lending rates and what they can infuse from their own balance sheet into the economy and vice versa, take it from the economy. From the hands of 89 entities that are authorized to come to the guichet. They do not control anything. Real life. Proof in the pudding. When they cut rates, nothing happened. But the put premiums have gone. Why? Because the VIX has dropped. Everything is gone. Call premiums, put premiums. I bet you if you were holding a call, you were wondering, why aren't you making money? That straddle now has got cut. even though they got the move to one direction, because the premiums are coming out from both calls or put. That's what it means for the VIX to drop. It's actually calculated from the VIX options a month out. So back to the Besant box, the Besant rant, the blue box. This orange thing played out. Price action logical. Punk, take that out. I'm trying to go long FCX. Somebody give me ideas. YouTube, you're too dang quiet. That's okay. Okay, here's a trade. If we bounce off of this purple line one more time and lose it, we will not only go to the orange circle, we will go to 634.80, the red line down below. The target we skipped on earlier today. That is a fact, Jack. So if we go up here and we don't take out 636.80, and then we lose this, this is the outcome. Inverse head and shoulders, about $1.40 from the top. So yeah, you have to fail here again. And it wouldn't be anything he said. It would just be price action. I'm not saying that's where we're going. I'm just sharing with you targets. The put is back to green. We should bounce here. All right, thank you. Yeah, the IWM is murder. Moidoy. Murder in the sense it's a highway robbery. They go this way and they go that way. Okay, this is where I said number 1, right? You see that digit 1? They did that. If they don't get back up here, they have like 10 minutes, maybe, not even. We're going to curl back down and finish number 2. I'll delete 1. This is ridiculous to keep here. Whoops. I'll delete it. That green line is not mine. It matches up with the red line, which is not mine. But those two are areas of interest, which means selling zones on the way up. And look how well they line up with my blue box. That you can't make this up. You cannot make this up. The green line is drawn automatically from the harmonic chart. The red line is the highest point of volume for this period of time on your screen. You can't make that stuff up. And it lines up perfectly on top of each other, on top of the blue box, which we drew yesterday. The neckline of this head and shoulders is exactly the bottom of the blue box that we drew yesterday. Well-organized mess. I love it. Imagine doing this without the direction of somebody that knows charts. A whole group of people. Look how many people are posting perfect comments on charts. Corey has been the most vocal on charts. And then we have from Friday's comments on Mert, he gave 2272, which was pretty much the zone we needed to look at. And look, target 2. Ding, ding. Thank you very much. They're right here right now. They're in this process. They lost the neckline. They're trying to recover it. That's what that green line is. It's this part. Exactly. Sold. Small gains, but you were red, and now your gains on mine, on the put, my put. They're back inside the opening range of ping pong, blue, purple, blue, purple. We never lost our opening. Well, we did pop, and we took the target, one of the targets of the opening range. But that is a change in behavior. The last 2 days, it was the downside that breached, not the top side, the downside. Meta triggered another low, which is not good for Meta, but it's going into earnings tomorrow. That doesn't matter. One of the mega caps is going to give it up today. I wonder who. Maybe after hours. We're going into the top of the blue box. Today, they have demonstrated one thing. On the way up, they scurry through the blue box. Thin, right through it. Let's see if they can do it a third time. They've done it twice already. They did it here, and they did it here. Scurry. Let's see if they can do it a third time. Go on thin volumes. You said they're even. Why don't you close them or balance them out with a credit call spread? My watermark is hiding the stock. What watermark? This one? What stock? This is the SPY. The one on the bottom right is FCX. The stock name is in the middle of the page, right here. SPY, FCX, the candles are hiding it. Ooh-wee. No, sir, not this late in the day. I don't do that. The iron condor from this morning is down to 20 cents. That's more than 80% of its maximum gains. I would be out. Even the one that I offered later, 6410, 6335, that is 50% of its maximum gains. Both sides are still statistically viable. You can babysit it for the last hour if you want to get maximum gains, but Powell is talking and Trump is tweeting. Don't want any of that junk in my books. I would be holding nothing. Debit call spread. You could do a debit call spread. I'm trying to do a credit put spread. It's not filling. Let me see if I sell a put, how much they will require. $300. If you sell a put for FCX for December at 33, and you say, between now and December, I'm a buyer at 33 FCX. It's at 39 right now. They will give you $110 in credit or $100 in credit. And so your break-even point would be 32 after being assigned, if you get assigned. And then they will lock up $300. Now, the scary part about that is, what if the stock market drops and volatility spikes or something happens with FCX? They may tell you, oh, that $300 is now $900, please, per contract. So then they force you to do something stupid. Starting with a credit put spread would be much better. So instead of selling a naked put at a delta 19, you can sell a credit put spread to start the trade at 32 or 33. If you sell it at 33, that's the edge of the straddle. Now, I hate the fact that this is December and you have to live through an earnings report, but that's what it is. So if you sell it at 33 and you make it $1 wide, they'll give you $30 per contract, and you're risking $70 per contract. That's a pretty good risk reward if they give it to you. Let me see, credit put spread. No, those premiums have not, I haven't been able to fill a thing. Everything I try, it shows you the premium, then the premiums disappear. So I'm walking it down, which I usually would not do, but I'm trying to get you a tradable number, for crying out loud. Nothing. Red ticks, nothing, because it's out in December. This one should fill. No, not even this one. Holy moly. Nope. $0.20. Those stingy, you know what. December, 32 sold put. You can sell it naked, collect $100. You sell it and you buy a put below it, you can collect $20 if you only make it $1 wide. So if you do 10 of those, you make $200 and you risk 800. All you need is for it not to be at below 31.8 on that day. But the idea here is to go long the stock. So you start with a credit put spread. If it has another bad day tomorrow, you then decide, okay, I'm still okay owning it at 33, and then you decide to sell your protection. So then you get more credits after the drop. So then your break-even point lowers. The risk is still there, but the break-even point lowers. The put is up 26%. Exit. Unless you're looking for that 631, I would exit 30%. Let's go with 26%. Exit. Because now they're likely to bounce to, guess what? Try to go where? Oh, back into the neckline. So this played out. We got to my circle. I told you, if we get into the yellow box, we will get to the circle. And then I updated it, and I said it will be a head and shoulders, which has lower targets, which will go to the red line. Hello. 50% on that put if you didn't have time to close it. And we're an inch away from losing yesterday's support. Yesterday's support is 6396.25 ES. We are $6 away. That's 0.6 SPY. So 634.4 will open the trap door. That's the low from yesterday. And the VIX is the high of the day. No way they learned anything new from this moron. No, that's bad. He's not a moron. He's definitely a smart guy. Yes, Corey, high five, man. High five. Look at the mega caps. Who pooped? Meta, Apple. Apple 2088. I gave you that number an hour ago on Apple. 2088. I even put it on the screen. I love it when a plan comes together. Look at it. That's the yellow path we drew on the screen live, and this is how it transpired. You cannot get more accurate than this path right there. Copy, paste. Copy, paste. That's all I did. I copied it, and I moved it over. I did this. That is amazing. We'll leave it here. I will be out of Apple short. And the VIX calls have recovered a lot. But they're still red on the day. That is insane. That is insane. Remember, 631 is the gamma magnet on the SPY. 631. That's $4 below here. That means some real shenanigans going to happen. If they want it still. Let's go check to see if it's still there. That stuff changes fast. And it's still 631. Okay, we have a change on the SPX. The number grew at 6360. SPX 6360. Another dollar on the SPY would be the target of that SPX. Woo-wee! We get lucky. No. Apple. Okay, the moving target on Apple is much lower. We're not going to say where it is, but it's definitely not here. You can stay short Apple if you want to. Look at the reversal in the financials. That was a killer. Killer. SPY and the financials, they look the same today. Okay, Iron Butterfly from earlier. Time has passed, so probably not. Oh, it's up $70. Where are you at, hermano? The Iron Butterfly from this morning. It's 1375. Right there. It was 1445, 1450. Remember, you only risked $50 to make $70. More than $70. It's now 1350. $100. You made more than you made twice as much as you risked, and the ES is playing with fire. Another tick lower on the day, and you would trigger yesterday's support. Luis, I hope you stayed in it. Exit, you made either 100% or 200%. Or 150%, sorry. I love it when we see something and it works out. Now we have upside pressure from options, but we have something else in play. I don't know which is going to count more. There are too many puts paying. That's what means upside pressure. I need to write up a trade. I need to go to FCX for a chart real quick. Sorry about that. Where did I do it? Holy cow, it's now $30. Quoting. Accenture? What the heck? What's going on with Accenture? No, it's not. Okay. All right. So the write-up. Good afternoon, team. The Powell event is wrapping up. I will have more on this later. But more exciting was the move in copper prices. Oh my lord, oh my lord. 130% for relativity on that put, the price. The Iron Butterfly is now $1,250 to close. That's $200 out of a $50 risk. Just to tell you how things change really quickly. All the calls were obliterated, and we lost the low from yesterday. So I had a few bullish talking points earlier. Tesla went to 312 immediately. So that is a normal move on Tesla, believe it or not. That's the same range it does any day, Powell or not. Meta is the one that lost his lunch, and Microsoft as well. Well, those two could reverse overnight. We don't know. NVIDIA, don't call this a red tick. It's just coming back into its breakout neckline, which is normal price action on any given day. So don't pick on NVIDIA. Bitcoin even fell. So did Powell say anything bad about Bitcoin? No. So this white line that is coming into view is actually a moving average that has been anchored a long, long time ago. So I'm going to zoom back out on here to see relativity. I forget what that... oh, yeah, I know. That's a longer dated box. And we'll go to 10 minutes on these guys. Okay, so these guys are still not in trouble. They're just at the baseline for the last day. Whew, what a day. We go to the SPX picture, and look, now we sold a rally. What? So we had a rally, we sold it, and we made a lower low. One. We won't report on it yet. We want to see the next one. I'll repeat. We made a rally, we sold it, and we made a lower low. We will watch for the bounce. And that's why we close the Iron Condor when Nick says close the Iron Condor. No. No calls. No calls. This market has... those are weak hands. They don't care. Sell, sell, sell. I'm up a zillion. Sell, sell, sell. They have no support. Yes, but you better lock your profits. No, actually, do not listen to that statement. No. Do your thing. I'm talking to Bill, only Bill. Do your thing. Yeah, don't be mad. You should be mad only if you don't think you can do this again. Look at the VIX. It just gapped up. The VIX gapped up. On what planet? Is FCX bouncing hard? Because that trade just disappeared. No, that must be a misquote. All right, let me go finish my write-up. I sold to catch it. Method, what is beeping? KRE. Yes, I put that this morning. Method 1, buy shares at 39. I'm not saying anything. One second. Sell to open. Okay, one more picture. And then I'll be all yours. Chart. FCX chart. I need to send it to for people that are not here. Stupid. One second. I'm almost done. If you're new, you should look for an email to make sure that you're hooked up properly. Okay, I'm back with you. Sorry about that. We do have hundreds of people who are not here. Okay. Whew. You can tell a quality stock from a non-quality stock is how it handles adversity. So you look at your shares and you decide which one just lost its lunch and which one just came back to a breakout line. That's how you can tell what kind of quality positions you have in your portfolio and which ones are frothy. You might want to add to your conviction trades that way and avoid the frothy one. So I have a credit call spread that I have shared with you at 23.10 for today. For tomorrow, I'm sorry, it's down to $1, not a penny. If you have it, you should close it. Now, not that we're going to spike 100 points between today and tomorrow, but who the frick knows? It's inside the RUT and it's cash settled, and it's a penny to close. Maybe. It's probably not, but anyway. The RUT, unlike the SPX, you can do it in increments of sub 5 cents, a penny increments. The VIX calls that I've been holding for a while are down 18%. Mind you, we broke records in between then, including records from yesterday and the day before. So I would say that is a solid setup, and it's got a lot of time on the clock. I'm making sure I don't have any zero DTEs that I've forgotten about. I do not. You know the market is not scared when Palantir is still green, right? These red ticks mean nothing, absolutely nothing. Gold, I'm short silver. I mentioned gold lost support yesterday and today. The short in silver is still red on my books. It expires in 16 days, so I hate it. I may roll into a longer dated put if I still like the short. So let me go revisit the SLV chart. I think I shorted it based on a weekly harmonic. Yes. So we'll see. I may run out of time on silver. So I might roll whatever money I have into more time. So if I have 6 contracts at a level that has a low delta, I would want to close 6 and open 3 quality ones for an extra month. No more money, just better positioning. Where is silver? My delta is super good. So I'm just going to wait another couple of ticks and see what happens. I just want to buy myself some time to be right, but with better posture. The only thing I don't like about my trade is it only has 17 days on the clock. So tomorrow I'll decide whether I want to roll it or not. I'm getting the benefit of the heat right here, and short term, it could carry another day. Another day would bring me a lot more premiums on a shorter term trade setup. All right, YouTube, do you have any questions? No. You're just there, YouTube. You're just there. Engage. This is your time. See, all the arrows from earlier today played out, but boy, did they take a U-turn, right? And this line, that was the morning range that we had talked about if you were here earlier. I lost track of how many winning trades we had today. That was pretty good. I need to learn the roll. When and why. Very easy. Simple logic. Charles. Here. This is the logic. Oopsies. I don't know what just happened. I don't know how I clicked news. You couldn't have been more wrong, sir. So the logic is the same. I follow 3 steps. 1, why did I take the trade? If that reason is not there, I'm not in the trade anymore. Bye. I'm out. 2, if number 1 passes, have I hit my stop gains or stop losses? Did I implement my exit strategy or not? No, I pass it. Okay, I go to 3. What's the delta on whatever I'm long or short? What are the odds my trade is going to work out? I looked and my odds are still 50-50. I'm at the money. So the odds are okay. The only thing that's not okay is I'm running out of time. If I wanted to add time, I don't want to add risk. So I'll roll it out in time. So I'll close it, I'll take the loss, and I'll reopen the same dollar amounts, same position with more time on the clock. So if I continue to be right, I will make my loss up. So that's called rolling. It's not magical. You actually effectively closed the loser and reopened one, a fresh new trade. But the position is still there. And if the goal is to grow the account using strategy, this would be one of the strategies. You buy yourself some time. Thank you, Sam. Appreciate it. So the Uncle Jerry is done. Not quite, because this is managing a trade that's in trouble. Dollar cost averaging is you manage the trade from getting in trouble by going in pieces. This is me not wanting to I don't average down. I average in. Dollar cost averaging is a bad idea. I don't know one professional that does it, but they do it differently. They average in. If they have conviction but shady, okay. You average down, but not if you take a full-size trade. If I take a full-size trade and it goes against me, I exit. Yeah, so you're not averaging down, you're averaging in. If you let me finish, you would have heard that. You average in. If you think you're right, but you know you might not be perfect, you take a position knowing you're going to add to it. So your maximum risk is not on the table. A risk is on the table. And then it goes against you a little bit and you still like it and you hit another trigger, you add to it. That is averaging into a position, not averaging down. Averaging down is making your bet the way you usually do, full size. And then it goes against you and then you double your problem. That, I don't know one professional trader that does that. Not one. They either take a full position and they stop out and they trade it another time, or they take half of the position and then they add to it as they see fit or unfit. Those are my thoughts. You feel free what you do. Like if I said on FCX, I take half of a position and I usually buy 100 shares, that means I'll take 40 to 50 shares tops. And let's say FCX drops another $5, I'll decide whether I want to add the rest. If not, I only have half the problem to deal with. So I sent out a note about FCX. Dave. It's funny, not funny. But knowing you, I know what you mean. This is my write-up on FCX. Somebody that's not here, that hasn't heard a thing, that's not watching the stock market. Powell event is wrapping up. I made it a side conversation. More exciting is the move in copper. Presidential tweet caused a crash in copper prices, which sent copper stocks crashing. I sold a small position in FCX to catch it. Method 1, buy shares. Method 2, my least favorite, buy calls, but if you do, by December, at the money calls, half position. Method 3, sell puts to own shares. Sell to open a put at 33, 32, whatever. You collect $100 per contract. This commit me to owning share at these prices. My break-even point is at 31. Method 4, which is method 3, but modified. Instead of just selling a naked put in the free fall market, potentially, I sell a put and I buy a put for a few days. In a few days, if I don't like it, I'll just take the other one off. Very simple, very silly, very slow poke, super far out in time. I don't have to hold it until December. If we have a bounce and it gets down to 5 cents, I'll just buy it back. I can do both. I can sell a put spread and buy a call. I'll start with the put spread. I don't have to be surgical. Couple red days, you add the call or the call spread. Sweet. Okay, thanks. I love that. That is a number I mentioned to you the other day. I said, if this, then that. I don't remember what this was. I do like that number. That number was on my radar a couple days ago when we discussed Netflix. I don't know about the downside target, but that number, like the downside happening, but that number is familiar. Let's go look at it. Netflix. When he says swing, it's probably for a few days. You can use the end of the week contracts if you want to. It is Wednesday. And that would be nothing more than just them falling into a support zone. So this is a 2-hour chart. My concern with Netflix, okay, so look at the chart. They are buying dips and making higher highs. If you go to the 2-hour chart, they are selling rips inside of a 2-week-long trend. I mean, that's legit. And now anything around 1210 has become shortable, especially around 1230. So it's easier to lose 1160. And if you do lose 1160, just doing what it did in the last 10 days will bring you down to that 1060 zone. Let's see, copy paste. Oh, look at that. I already have that stuff on there. That would be this behavior again. No need to do the copy paste. I already have it. They lost the neckline. The downside drift lower would be fine. Another way to trade this, if you don't want to buy puts, sell a call spread and buy a put spread. How do I do it? I sell a call spread for this week. I collect the money. I buy a debit put spread for next week or the week after. I'll give you numbers. It might be hairy though. Netflix is a violent stock. But selling a call spread is definitely easier than buying a put. Okay. Easy. Sell a call spread for this week at 1210 or 1212. You decide. Width can be $2.50, can be $5. You will collect a chunk of change. You do one contract, you can collect $70. You do 2 contracts, you get $140. With the money, you buy a put spread for, say, August 15th. $11.80, $11.70 will cost you $370. That's $10 wide. Woo! Okay, so the KRE, so out of pocket, if you just do one contract of each, you save yourself a little money on the debit put spread. You can do one or the other or combine the two. And you can mix and match the counts. So if you sell 3 call spreads, you only pay 300 overall, under 300. I'm just saying. These are thoughts that you can do. Mind you, Netflix will probably move in violence in response to what they do tonight with Meta. Meta and Netflix will probably move hand in hand. Okay, what was I going to do here? KRE. So I looked at the KRE earlier today, and I said what the KRE, the market will do. And I gave you my crazy logic. It's not that crazy. I woke up thinking about it one time. I was like, oh, okay, that makes sense. So this has been defended twice. And now we're inside this candle. That was, what was the headline here? Oh my God. 2 times Powell low 717. 2 times Powell. Okay, something on Powell on 717. On this day, there was a Powell thing, and it was a 2 times defended low, and we just poked through it. That's what it was. Just an observation that they're losing a solid bounce level, but they're falling into a support zone. Ooh, okay, ABC. If we lose the low of the day, 629 could be the target. What are you talking about? By the way, here comes 631. That is insanity. The Iron Butterfly is up $400 because now we're approaching, what was the middle? We're $5, $6 away from the middle of that sucker. That was a well-placed Iron Butterfly. I did tell you to exit earlier. $400. You only risked $50. I said exit at 100 or 200 or whatever it was. 50, 100, 150. It folds over what you risked. And that's what we call a Yeezy. When you in the morning at the open, you were here. I shared it with you. You said you'd like to buy and sell puts and calls. So we focused for you on that. Okay. About an hour ago, you guys would say, we saw some gamma exposure information that was pointing to 631, where we're falling into. And I said the crazy way to trade this is to do an Iron Butterfly. And we had a whole lesson about the Iron Butterfly. And I believe you were here and you heard that lesson. That trade paid $400 out of a $50 risk. Well, right now it's worth $400. I said to close it earlier, but it was a big win earlier too. So that Iron Butterfly is the one I'm talking about. Late in the day, I don't do these trades. It's just too much hassle. But when it only risks $50, no problem. All day, every day. What? Get out. Oh, nice. So $250 for you, sir. $50 risk, paying $250. Not shabby. We don't get those opportunities every day. Today we had a clear, they kept on telling us 631, 6310, 631, 6310. I was like, all right, we will listen. It didn't look that doable, especially when we spiked. I need to send someone a picture. $370 end of week. Let me see. I'm short MSTR. What? Nice. Yeah, I'll take it. I won. It wouldn't make me any more money, but that would be something. Where is it at now? Oh, 393. Yeah, no problem. Back to Meta, half hour away from the closing. Yes, let's go do that. If we lose this, we can go to 629, 628.50 just by the rules of ABCs. Nothing too fancy. Just when you fall from one point to another, you consolidate, and you lose the consolidation, you do this. In this case, it doesn't look that easy. We're falling into these green lines, which I assume they're support zones. So look how accurate they are to the lines we keep track of. I don't know if they'll do that. We'll see. Let's go do some homework. We will start with ARM. I'll do the most important one last. 141 implied volatility. That's not quite 3 times, but close to 3 times the normal volatility. They're pricing in $12, $13 plus or minus. Plenty of support, some upside pressure. If it falls, it rallies. If it rallies, it falls. But if it's at 168, it wouldn't surprise me. 165, 168. That's the initial knee-jerk reaction to the data that I'm seeing. And let me see here. We are doing ARM. $2.50. Not really, but I'll look at it this way anyway. 200. Yes, what I said stands. Let's go to TradyTix. Sometimes it gives us more insight. Who is it? ARM. ARM, no information from ARM. Okay, so I'll stand by what I'm saying here. So if somebody, we got to see what kind of behavior it usually does. Like, what has it done before? I'll go back to here while I do this. Okay, in one time, in February of 2024, it did 5 times the normal, and since then it's been very quiet. 2 red, 1 green, 2 red, 1 green. So 50-50. So an iron butterfly or an iron condor should work for that bad boy. And let's go do it. Okay. 12.5 width iron butterfly centered at 162.5 where it's at. Gives you $930 in credit, $920 in credit. 1 second. That's one way. That's one way. The other way would be an iron condor and 180, 145 maybe. Let me see here. 180, 182.5 maybe. 182.5. Yeah. 182.5, 145. I'll give you that visual. Either of those two works, and I'll give you the difference. And if you're on YouTube watching me, this is not a trade idea for you. This is what I think could work if nothing bonkers happens. And this is just for educational purposes. So to sell an iron butterfly means to bet that nothing will happen outside of what's expected. And I'm going to tell you where the numbers of profitability for the iron butterfly are. That's it. This will be the iron condor, 182.5, 145. Actually, the success zone on the iron condor is slightly wider than this, but we'll just leave it there. The white one is an iron condor. The blue one is an iron butterfly. Those are two different separate trades. The top two lines are an iron butterfly, centered at 162.5. So I sell a call and a put right here on the same order. I sell a call and a put at 162.5. On the same order, I buy a call above and a put below. They are $12.50 apart. So I'll buy the 175 call and 150 put. That's an iron butterfly, which indeed in your platform might say is called an iron condor, because it is. The iron condor is different. You sell a call spread up here, you sell a put spread down here. But if you bring them together, you get an iron butterfly. So that is ARM. If you cannot trade this tomorrow morning early, if you cannot be with someone tomorrow, don't take these. These need attention right at the morning. Okay. Let's do homework on the second one that I like, which is Qualcomm. Qualcomm. 159.4. 6. Qualcomm. Implied volatility is 98, which is 3 times the normal. Almost. They're only pricing in $8 and change. Same exact scenario. Has plenty of support. No downside pressure. Some upside pressure. So if they want to be... Did they not change? Qualcomm? Same numbers? 162? I may not even need to change anything. Holy moly. Okay. That never happens. Looking at earnings, this one moves outside the straddle often. Last time it did, it was negative. So it had red, 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 green, red, green, red, 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 red. Clearly, this one, like Ryan said earlier, it does not like to hold its greens on rallies, on earnings. So this earnings options chain says otherwise. Let's go see if TradeEtix says otherwise as well. No clue. Okay, so let me go and structure the deal. Qualcomm, I would do it 160. $10. If you do $10, oh, by the way, the other one doesn't risk a lot, $320. This one, 6.8 in credit, so you're risking a little bit more. You're risking the difference between 10 and 6.8. $3 and change. You're risking more for a narrower range is what I meant. All right. Weird. That's weird. So we have to do it round numbers. 150, 145, no. 145, 140 credit put spread. See, the 175 doesn't pay anything. 172.5. Yeah, that's about it. I don't like the Qualcomm one. Again, two different setups. This is the Iron Condor. 172.5, 145. You see how fast I'm doing? So you need to double check my work. I am not responsible for the results. If I make a stupid mistake, you need to verify it. 153.2, 166.8. Mistakes are easy to pick out. Okay, so two different trades. This one is the Iron Condor. This one is the Iron Butterfly. The Iron Butterfly, I sell a call and a put at 160. I buy a 170 call. I buy a 150 put. Easy. Iron Butterfly. I collect almost 700. I'm risking 300. On the Iron Condor, I sell a put spread down here. I sell a call spread up there, and I hope they stay inside the range. Qualcomm. You have to be available before the bell rings so you know how to manage it in case it goes wacko. Going wacko is a highly technical term. ARM historically moves less wildly. So if you want to quote a quieter trade, potentially ARM is famous last words. So Meta, let's see how well it does it over the time. Wow, Meta quiet. It moves within the allotted 5% to 8%. The last time it went crazy, February of 2024. And before that, February of 2023. So we have green, green, red, green, red, green, red, green. So anybody's game. So let's look at the options and see how they're lined up for Meta. We're doing Meta now. Okay, we'll talk later. I'm scared about Meta. You've said those words many times. You should close that trade. There's an intangible health aspect of it. That's a cost. That's not dollar signs. You have to pay attention to it. Nothing is more important than your health. 99% implied volatility, 35%. So at 3x, one would imagine that it's more than this. $40 move up or down, priced in. Some upside pressure, but if it pops, it drops. It's going to take a lot to rally. That's my take. Let's double check. Quickly, I got to do Qualcomm. Yeah. Meta. $250, awesome. Yep. I wouldn't hold puts, let's put it this way. And if it spikes, there's a lot in the way. Wow. Hmm. Yeah. Okay. Let's trade this bad boy. Not knowing which way it goes, I would set it at the money or slightly higher. So I'll go at the money, 695. But that's going to be pretty big. The Iron Butterfly, not open for most people. $40 wide. There's going to be a pile of cash. Yeah. So you can collect $2,900, thereby risking $1,100. What happens if we do $30 wide? No. Okay. 650, so 640. Think 3 times before you take this trade, okay? The Iron Butterfly. The Iron Condor, I'm not so concerned with. We'll start with the Iron Butterfly. Iron Butterfly, centered at 695, not knowing where we're going. That's the current price, right? Yeah. And the break-even points on that one are 666, 724. That's the Iron Butterfly. The Iron Condor should be much wider. Credit put spread at credit call spread 760, 630. We'll make it white box text Iron Condor. Okay. Yeah, Meta 666. So the Iron Butterfly is pretty risky. So you're selling a call and a put at 695. You're buying a call higher and a put lower, $40 apart. So you collect almost $3,000, $2,900 for one contract, thereby risking $1,100. Tomorrow morning, if we open inside this blue box, you should make hundreds. If the bell rings on Friday, if you have that kind of courage and we're at 695, you will make thousands, but that's not the goal. The goal is to make X percent of 1,000. That's the risk, right? This one is a lot easier to swallow because it only risks $400. That's it, $410. The yield is 20% ish on the white one. Easier to win with. Meta. Corey, what are you doing, man? Okay, next, who do we have? The big daddy, Microsoft. 2.5 wide. Show me 600. Go to here. Meta would change it to Microsoft. Implied volatility is only 64. It's almost triple, though, the normal. That's because it's a good company. There's no surprises. There is downside pressure on Microsoft. Weird. It does have a ton of support, but if it drops after hours, it wouldn't surprise me. So if it pops or drops after hours, it reverses. There's reason to drop. Maybe to 500, 490, maybe even 480. I don't know why, but there might be. But it should come right back up. Knee-jerk reaction. Nothing to carry forward past that comment, the period of time of tomorrow. $4 million bet for 815. Irrelevant. They're transacting. entered the wrong one. Microsoft. All over the map. Okay. So Etsy gave back its gains, right? I had a troll today. I'm prepping it. Carrying the same color codes and everything. So I'll go here while I construct it. We decided that Microsoft, we're just going to do it balanced, somewhere around current price. And I'll go check 510. I'll go check to see what does Microsoft usually do on earnings with regards to the straddle. Not which way it goes or anything. That's extra, maybe. Oh, okay. Don't do an iron butterfly on Microsoft. The last three broke. Green, red, 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 green, red, green, red, green, red. But it breaks the straddle often. So iron condor, maybe iron butterfly, not advised. They don't pay you enough, is what it is. How much should I say the width of the spread is? 18. Ooh. 1750. Okay, 1300. What if I do 20? Okay, 8.5. No, 14. Okay, 1750. The iron butterfly is not going to be good. The iron condor seems like a better, safer bet. Safer in the amount of money it risks, as well as odds of success with it. All right, so I'll give you the lines. I'll adjust the boxes. I'll go with the easy one. Iron condor, you're selling 540 credit call spread. You're selling 482.5 credit put spread. Feel free to modify them to make them more aggressive. If you make them narrower, what you do is you make your odds of success slightly lower, so that's more aggressive, but you make them safer, less aggressive from the amount of money you lose if you're wrong. Hopefully you know the difference. And that's the iron butterfly. Iron butterfly is not a good idea on Microsoft, typically, historically. Okay, I'm back with you full time for the rest of the day. Okay. Sweating over here. Whew. Carvana. Lamb Research. Lamb Research. Let's do Carvana first. I read it first. Implied volatility is 200. Almost 4 times the normal, 3.5 times. They're pricing in $40. Huge downside pressure. Huge. So I wouldn't hold calls just in case they dip. They might dip and spring right back, but I would not hold a call. CVNA. There's a big bet for next week at 340. Let's see if we can make any sense of it. 1,000 calls. Sticks out like a sore thumb. If we can match it up with 1,000 transaction, maybe somebody rolling from this week to next week, or they're doing a calendar or something. So something to note. Let's look at how it usually behaves around earnings. I would imagine it's a wild one. No. In the past, it used to be. The last two have been tame. I would not do an iron butterfly. It's going to be a pile of cash. So an iron condor, and I would do it below 285 if you can get money down there. 287.5 credit call spread. 287.5 credit put spread. Sorry. What? And it looks like they're paying you single digits. 397 credit call spread. Way up there. So they're biased up. Now, the last one you guys said, LRCX, Lamb, on Trimble Way, is it? Lamb, what does it usually do? Behaves except for 2024, July, it took off. LRCX. Oh, Hood, yeah, that's a wild one. LRCX, twice, 2.5 times the normal moves. I wouldn't hold calls. 98 wouldn't surprise me. It has support if it falls. It has resistance if it rallies. I would not hold calls for LRCX. LRCX. Hood is the wildest one, probably. Let's go with Hood. Nope, not a lot here. Let's go with the reaction to earnings. Sometimes they surprise you. Calm. Reaction to earnings if they're wild all the time. Nope, they're wild all the time. 50-50 when it breaks the straddle or not. So not good for a iron butterfly. Let's look at the options. Implied volatility 160, normally is 60. So not quite 3 times the normal. I wouldn't hold a put. They might want to drop it and pop it, or pop it and drop it. So 110 wouldn't surprise me. 100 wouldn't surprise me, but I think they recover. Let me check one more place. Yes, it's really well balanced. If it rallies, it drops. If it drops, it rallies. 107, 108 wouldn't surprise me. So that's Hood. You could probably do an iron. Did I say that? Iron butterfly. You could iron, but risky. Iron condor might be quote safer, more tame. Too short term to tell you that. Maybe we have 2 minutes to go. 106. If you do it at 106 and you do it $10 wide, you will get $700 in credits, risking $300. That's not bad. Iron butterfly. An iron condor, you would do it at probably 92 credit put spread. I'm double checking. 117 credit call spread, maybe. 93 versus 118. 93 credit put spread, 118 credit call spread. 119 may work already. Also, I'm sure. Okay, we are closing flat. This dumbass market. Everything is this week. Never it's next week. We're trading options for the earnings. Everything for this week. And all of these trades are super high risk because you have emotions to deal with. They're going to close green. Watch it. Watch the burst at the bell to close it green because they want to log the algo as green. Whee! That was an exciting day. We had the opportunity to make money on the bull side, on the bear side, twice each side. That is a mega interesting day. Look at the U-turn in the VIX. That's why the calls were not hot. What did I say when the VIX spiked to a new high? Where is the money? Where is the money? Yesterday, the VIX spiked a little bit. The calls went ballistic green. Today, they were red. At the highest point of the VIX, the calls on the VIX were red. That was a sign that they were not going to hold, and the VIX made a complete U-turn back to the neckline. It's not a bad day for the VIX, but it's definitely not a good day for the VIX calls. Well, they did not close green. They did on the Qs. And now the party starts. Microsoft reports right away, if I remember correctly. They're cool that way, unlike the prissy Apple. I don't know about the rest. Qualcomm looks like already reported. Either that or it's like Ryan says, they always lay down. Later. You're going to leave? Oh my gosh. I worked so hard on these earnings. I want to see the outcome. Let's see what happens. Fingers crossed. Okay, movements on Qualcomm. They flash low. They're trying higher. Something's happening on Qualcomm. That low is lower than any part of the day. So did they release or no? Microsoft usually comes out right away. Oh yeah, it's definitely. Bye. Thanks for the messages. I appreciate it. I just didn't have time. Likewise, Dave. Cheers. Bye. Don't let the door hit you, or the good Lord split you. Right back at you. Okay, I think Qualcomm, we can rest assured, they did send it out. That's an unusual move. Well, out of the day, you know. Go to, whoop, on Black. On BlackRock? What's going on? Did it report tonight? Later, Corey. Thanks for your contributions. I'm sure Ryan is happy. I believe he bought puts on Qualcomm or bet down or said it would go down, and it's delivering. The options are not expecting down, even though almost every reaction is down. So let's see if they spring it back up before the open. Microsoft, what's going on? Last time they reported at the bell rang, Microsoft came out. Am I remembering wrong? Where's Meta? Beep. Who? XLK. What happened? Oh, Microsoft. That's why the XLK. Haha. Microsoft up 3% right off the bat. The XLK beeped, maybe because of ARM down and Qualcomm down. Okay, so let's put the XLK here. Up. Who's moving the XLK? Aren't these more important in the XLK than Microsoft? Maybe not. I forgot what I said on Microsoft. We'll see. I think I said the Iron Condor safer than the Iron Butterfly. One of those stocks, I think it was Microsoft. They don't pay you for the volatility it has. Meta. It'd be good if Meta reacts down, then you have balance. I remember a year where Netflix reports moves 18%, everything else moves 18%, 12 to 18% thereafter. Every one of those mega caps reported. You're welcome. You're welcome. Absolutely. Okay, arm down. Maybe we catch the falling knife. 160 is not a bargain. 150 is not a bargain. It might be a tradable dip. And there goes Meta. Up 4%, which is yesterday's levels. They've been struggling with this level for a while. Let's see how far back. June. Since June, they've struggled here, but this is a pretty legit move. And oh, there's Meta. Why do I have it on 2 windows? That's weird. I totally missed it. So we will put the SMH here too. How about the QQQ? The Qs are green. And just like that, the S&P is also green. So the Qs are up 0.6 right now. If you're looking at the NQ, you're up 0.6. But that's the highs of 2 days ago. We went to 572 on the QQQ. We just hit that to the penny almost. And we are just now at the highs of the day on the S&P. What an idiot market. This market has no conviction whatsoever, and that should scare the bejesus out of everybody, folks. They have zero conviction. They're bullish to the hilt. You cannot find a bearish person on anywhere. And they're bullish with high conviction, with no conviction. They say they're high conviction. We're going to shrug this off. We're going to go to the moon. But at the first sign of a bullet, they're in the bunkers. They're in the bunkers. This is the neckline that they lost yesterday on the S&P. So we had a flat day, and we are bouncing right now to make a green open. Meta above that June fail is open territory, and I believe it has been somewhat sick compared to what it usually does. We can expand that. Yes, so we are at an all-time high, and above that, right now, it just made a new all-time high. It just did. The blue line is it. So free. 840, 860, 660, whatever you want can happen in the next 2 weeks. 780 will probably, the first line, I would say, is 790 to 810. Maybe. You have to confirm the breakout under open session. An 8% move is definitely bigger than what they had planned for on Meta. And a 6%, this is a nightmare for me right now. They're both rallying bigger than the expected move. That just fuels the fire. You want them to split or at least rally within the expected move. Just because they perceive the red day today, they're overdoing it here. We'll see where they open. Okay, we're going to sign out of YouTube before I forget.